Discord? What's up, YouTube? Welcome back to another market outlook. Let's go ahead and break down what we're looking for, what we're projecting to see this week. And we're going to be covering NQ. So we're going to be covering a little bit on the future side, and then we're going to be covering Forex and also gold as well. So right here we are on NQ. Hopefully you guys had a great trading week. We are here on NQ, right? And we can see that we have taken all of this low resistance liquidity. We talked about this like probably 2 weeks ago, where we had all of these daily highs stacked up above us, which we were looking for the market to actually take. I wasn't expecting this large rally. I was expecting a more structured rally, which is what I don't like about this price action, but it's okay. We'll do what we can. So basically now what I'm looking for here on NQ is I'm looking for us to build some structure. Honestly, whether that is here or whether that is all the way up here, wherever we want to go, I'm looking for structure. We really don't have much to do at all-time highs. Once we're at all-time highs conditions, you guys have to be careful because there's no real draw on liquidity except for institutional price points, which we have the 27,000 level right here. That's the institutional price point, 27,500. So 27,000, 27,500, and then you have 28,000, right? So just large whole institutional numbers is the only thing that we could kind of give a rough idea of where the market might react. And even then we could easily just fly through these areas, right? These are just psychological numbers. Okay. But basically, as the market continues higher, I'm going to expect some retracements from these psychological areas, and hopefully we start forming some type of distribution, right? I want to see a distribution because I want to see all of these heavy buyers start taking profits on these orders that they've been accumulating since down here, and that they've been adding more positions on these reaccumulations, right? We have reaccumulation here, we have a reaccumulation here, we have a reaccumulation here. So a lot of orders are being added into this large movement, okay? I want to see buyers start taking profits, the larger institutions, of course, right? And the best way that they can do that is by distributing their orders. So we're not going to see one big move like this. What we can, don't get me wrong, that's the next option that we're going to talk about, but we can see that. But what we want to see, I want to see a more structured distribution of orders, right? Let's actually just start slowing down and distributing orders so we can get that type of movement. I want this. The reason why I want that is because that is going to set up a structured pullback. So once we get this structured pullback to fill all of these imbalances, we're also leaving liquidity at these highs, and that'll also create a more structured move for us to continue, right? And this is definitely not going to happen very fast. It can, and that's the second scenario we're going to talk about. But if this is the potential move we're looking at, I want to see this happen over the next 2 weeks to a month, not in 1 or 2 days. All right. I get it. I know the type of market that we're in right now with the war and everything that's going on, and this is why we want to be even extra cautious. So the next scenario is we can just start doing this again. As you guys can see right here, this gap right here, we could have a new week opening gap. And if we do, that's not bad. I want to see a new week opening gap that actually takes us down into the imbalances here. And when I say imbalances, guys, we're talking about 4-hour imbalances, 4-hour imbalances. We're talking about daily imbalances that the market has left over. Especially we have like all these breakaway on the daily that we have. I'm expecting these to at least get rebalanced. So when I say rebalance, I don't need the market to rebalance every single one of them, but I want at least some type of movement down that's giving us a pullback, right? So that way we can just continue the structure if we're just that heavily bullish. Okay. So that's what I'm looking for on a higher time frame. On a lower time frame, honestly, the only liquidity points that we have, guys, are underneath us still. So let's say the market opens and we get something like this and we start moving lower, right? Then this is somewhere I would look first to see if we can get some manipulations of these lows, of all these liquidity points here. And then we could probably start structuring our way back towards the upside. If we're just that heavily bearish, I mean that bullish, then that's something as well that we could possibly look for. But the main point here, as long as we pull back and restructure, price only moves for 3 reasons. We're either rebalancing inefficiencies, we're rebalancing our leg, or we are targeting liquidity. So at the moment right now, we don't have any major draws of liquidity to target. The only major draws of liquidity, which is not really major, are these intermediate lows that we've been leaving as we've been aggressively buying, right? So these are not like structured lows as much as these daily highs were, all right? So I'm not gonna say that the market needs to come and take out these lows. It definitely doesn't need to, because if we did, we would have, all right? So since right now, I think liquidity is not going to be on our main, like the main hierarchy that price wants to do right now. It's either going to be rebalancing inefficiencies or rebalancing a leg. And the most important thing I see that right now is to rebalance inefficiencies. I think that's the most important thing I see that price wants to come to as our next hierarchy of what price movement is going to be driven by. Okay, and I think rebalancing inefficiencies is what's going to drive price coming into these next month on NQ. All right, that just makes the most sense. So be careful, guys. Don't just buy the market either. I know a lot of people say don't sell all-time highs. That doesn't mean you just buy them. Just be careful. Wait for structured price action. That's what I'm going to wait for. Hopefully we get a nice New York, I mean, not a nice New York, but a nice Asia session range, London session range or whatever. And if we just manipulate the lows right here and then we just keep going higher, we get a reversal, I'm just going to keep trading that. But as long as we actually have some type of structure or some type of liquidity, something that we can trade from, right? When the market opens, we're not just going to try to just buy. Okay, that's all. All right. So don't overcomplicate it. ES is in the same boat. Nothing different. We're in the same boat. We've been pushing higher. So just keep that in mind here. All right, guys. Let's see. Let's go to YM. I know some people might trade YM. YM has not made new highs yet. And actually, you know what? YM definitely looks a lot more structured than everything else. We might have to start looking at YM a lot more. But YM is also in a bullish structure. I like YM a little bit more. At least we don't have these major imbalances that we did have on NQ, right? You can see here it's a lot more structured. We have one huge candle push, and then we have this that trades back into this major imbalance. So this is what I mean when I say I want more structured price action. Even this doesn't look 100% clean, but it's not as bad as that. All right. But I believe YM is still bullish as well. I do think we can get a retracement, but not that much. I think we get a retracement back into at least this imbalance. Maybe we can extend down here, but honestly, the way this is looking, we might just continue just like that, maybe a short retracement, and then continue pushing until we get to all-time highs on YM as well. We could see that happen next week, most definitely. This is a liquidity point to look out for, though. And this right here. But this is a much more structured liquidity point here, so be focused on that, all right? We could get a retracement from there, so market could just keep pushing, boom, boom, boom. So we can get a little good retracement right before all-time highs, and then we push. Okay, that could happen. So that's why we want to be careful right there if you're trading US 30. So let's move on to Forex and let's talk about DXY. So we've been covering DXY these past few weeks, and our bias stays the same. We're still inside of this large accumulation that we've been talking about. And if you don't know, then go check out the last weekly outlook. Now, remember what I told you guys here last week? We were creating this lower time frame bullish structure legs towards the upside. So we were holding from this low, and then we were holding from this low. Well, once we broke this low right here, this is what we are referencing now. Now we're referencing this larger leg that created that spring, right? As you guys can see, we have this large spring in our schematic, and this is our bullish leg that is holding buyers right now. Okay, so we have traded into the 50% of that larger leg, and what do you guys see? The same pattern that we've seen on the 4-hour, the daily time frame, you're seeing on the lower time frame. We have one, 2, 3 main drives of price before we accumulate. Okay, well, let's zoom down to the lower time frames. Let's go on the 1 hour. What do we see, guys? We see 1, 2, 3 drives of price. Right, so for those of you that were in my old mentorship from back in 2022, 2021, around that time, we talked about Wyckoff, we talked about supply and demand and everything like this. You guys can see that we're still using the same concepts to break down these charts a couple years later. So what does that mean? That means nothing has really changed. A lot of you guys that are questioning, does these strategies work long term? Do these things work long term? Yes, they work long term. All right. Nothing is going to change on these markets except for volatility, fluctuations. So the only way something really, really changes is if the world just goes crashing down. That could happen as well, but right. If the world goes crashing down, that I don't think trading is going to be the main thing that we need to be concerned about. All right. So just understand that none of these things change. Don't let your mind trick you into thinking that. So we have our accumulation schematic that is forming. Just because we have this accumulation doesn't mean we're going to go higher as well. We still need to get our sign of strength. So we need to close above this range. And then we also still need to rebalance this. And we also need to test this spring right here. So one, we need a sign of strength first. That's the first thing we need to see first. After that, we need a market to stabilize up here. And then if the market wants to, we're either going to do one or two things. We're going to pull back to test this spring. And if this spring is strong enough and there's enough buyers, we will see the market create another smaller time frame accumulation on the seconds time frame, 1 minute, 5 minute. There's going to be some type of another accumulation on here, no matter what time frame is on. And we're going to see the market start creating back our bullish trend, right? Or if buyers are that strong, we're going to push, create this sign of strength. We're going to get a small pullback and we're going to continue pushing. This is just an ugly reaccumulation that we're going to create back, right? So if we see that reaccumulation, then we know that buyers are very heavily interested at this point right here. Now, that's what we're going to be looking for. And the reason why you can look for that is because we still have this gap right here. All right. So that gives you a short-term target to target right now that most likely, if we do get this right here, we will most likely want to come fill this gap. Okay. So, price does not like inefficient pricing. So this is going to be your lower time frame target or your intraday target. Higher time frame is going to be this high. Okay. Which could take some time. And keep in mind, guys, we can definitely create more legs towards the downside. What matters is our sign of strength and if we're holding above this range. Okay. So right now, this is an accumulation that is forming. It's not confirmed yet until we get that sign of strength and until we get that retest of the spring. Okay. But just based on my bias, what I want to see is this low being held. If this low is held, then most likely we can make it towards up here and we're going to get a nice little rally on DXY, which means EU is going to go down, GU is going to go down, AU is going to go down. So all the XXX USD pairs, if we get this rally this week, we're going to see those go down. And then if you're trading the USD XXX pairs, you're going to see those go up. Okay. So what you need to do is, if you're looking at the DXY, you need to be like, okay, what pair am I trading this week? And is this pair aligning with what the DXY is showing? So am I going to get a setup that aligns with the DXY going higher? Okay. Very simple when it comes to that. So, and we're going to look at EU and those individual pairs by themselves, but this is essentially what we are doing when we're looking at the DXY. We're asking ourselves, does it make sense for the other currencies, the cross currencies as well, to play out the same way DXY is also playing out? And whichever one gives you the best setup, honestly. All right. But that's essentially what I'm looking for here on DXY. I told you guys, this is the area right here, right? This is going to be your first area to look for longs. Well, specifically right here. So the market can expand in here as long as it wants. We could create a large accumulation. This might not be it, okay? We can start forming a larger accumulation like this, which this might make a lot more sense than this just smaller accumulation here. I really feel like if this accumulation plays out, most likely it's going to be to target this inefficiency and this gap, and we could push lower, creating a larger schematic to actually give us enough buyers to drive us higher, right? I'm going to be honest and say this accumulation might not be enough to just push us. It could be, it could not be, but the way it's looking, higher probability, not really. All right. But just keep that in mind though. Just keep that in mind that what we're watching here. All right. So let's see here. And then we also know that this is the extreme. The 70 to the 80% is the extreme. This is usually where you want to see the spring land. So if we are accumulating here and you see the market just flex past this area, you're going to expect a nice reaction from this area. If we don't get that reaction and you see the market is doing this and we're just expanding, but we're not getting that push, most likely we're just going to continue lower. Because as prices coming down into the spring, if there's real buyers, the lower that price comes into the spring, the more extreme that the buyers are. Because you got to understand, the buyers that's getting into these prices, they want to protect their entries. If they really want to protect the entries, they're not going to allow price to come this low down here. So what they're going to do, they're going to accumulate more orders above their previous orders. That's all the accumulation is. It's just accumulating orders here, accumulating orders here, accumulating orders here, and getting more accumulation of orders here to eventually have enough orders to take the market higher and protect this point in price. So this area is going to become a daily low, a weekly low with orders on a higher time frame. Okay. But let's not get too deep. Okay. Let's move on. Let's go to EU. Let's talk about it. So EU has the exact opposite of what DXY is doing. So instead we have 3 drives. And remember I told you guys here that this right here, right? This low right here, I didn't like the fact that we didn't go underneath this low. That's one thing. But another thing is I would have loved for us to sit underneath this low. So because of that, this right here, UTAD, could easily be taken out. Doesn't mean it's going to be. It doesn't mean it's going to be, but it could be, right? We're still going to respect what price has shown us so far. And we're also trading within that 50% to 70% pocket, okay? And you guys are also going to see that we're creating the same exact distribution right here. We got 1, 2, 3 drives. We had talked about this. EU and DXY are literally the same thing, just flipped, okay? So what we're going to be looking for here is we're going to be looking to see if we're actually going to respect this UTAD of this distribution. You guys see this one candle right here? Where is it at? Boom. One candle right there. That's your manipulation candle, right? Your sponsor candle, your order block, whatever you want to call it. All right. I want to see price come back into this, and we want to see price actually respect this to continue lower if we're going to respect this current distribution. All right. That's what we want to see. And then we could target these lows right here. Boom. Simple lows to target right there. Right. And then that'll start a downtrend. So let's say, boom, we come lower, we target these lows. that'll start that downtrend for us to just continue coming down. And then we can target these lows right here. Boom. Just like that, right? Now, it's probably not going to be this simple, but I'm just giving you guys the ideal scenario. But right now on the lower time frame, what I would look for, guys, this is a high probability area to sell. So what I would look for here is look for a distribution inside of this area, look for sales inside of this area to take the market lower and to target right here, right? This is something very simple, or to fill this inefficiency, right? Either one of these things is good targets. At the moment, this is what I would look for right now. But on a higher time frame perspective, understand that this might not be what just takes us all the way down. It could be, but doesn't mean it will be, okay? That's the same thing I told you guys on DXY. That's why we need to wait for that confirmation on that lower time frame. That's why we need to wait for that pullback, that mitigation, and we need to see structure actually start giving us this move, okay? But it's a nice area to start looking for shorts. Now, GU is playing devil's advocate. GU still is holding its bullish leg, as we can see here. But GU also needs to come lower. Why does GU needs to come lower? Well, we just created, so exactly what I told you guys to look for on DXY earlier. You guys remember that accumulation? So we are inside of the pocket, right? And this is what I meant when I told you guys that do not expect the market to just take off on one little move. You guys see how this move is like so large and structured. But it's the exact same thing, guys. You have 1, 2, 3 drives. Now you have your accumulation inside of our pocket of our leg. Okay. Well, since we have an accumulation now and we have a sign of strength, I think we could do it better like this. Boom. We have our sign of strength. We see that the market is still holding, which is good. That's exactly what we want to see. But now we're getting our distribution, and this is exactly what we want to see right here. We're getting our first distribution. You guys can see we barely manipulate this high. So we know that we have sellers up here. We manipulated this high. We got this large, kind of ugly distribution right here. We have liquidity underneath us right here. So realistically, we're like, okay, boom, the market has accumulated here on a larger time frame. We're pushing higher. We have accumulation, simply reaccumulation, distribution, right? Basic market cycle. Now, after the distribution here, what are we going to look for? Well, first thing I would tell you guys to look for here on GU is, since right now we are in a distribution schematic, this low here, we need to see this low broken and stabilized. So we need the market actually form some type of movement underneath this low. We don't want to see this. We want to see this and a little bit of movement, then we can see this, right? We just don't want to see that. No good. So if we get a nice break and the market actually stabilizes underneath this low, look for a retracement inside of this. Then we look for shorts to take us lower to take out this liquidity. And then, right, boom, we take out this liquidity. And then we look for an accumulation to continue higher. Because guess what? That means what we'll have here, if GU actually wants to go higher, and this is just the perfect scenario, trust me, guys. What we'll have here is we'll have our 3 drive move. We'll have our push towards the upside, and within this 3 drive move, we draw another fibs from this low to this push right here, and we look for the market to come where, guys? Into the 50%, just like what we did on the higher time frame. From this low to this high, we waited for the market to come back into the 50%, into the pocket, and we got an accumulation. Well, if we want the best entry here, if you didn't get an entry down here, what you can do is you can try to take the sell into the pullback and then look for the long right here inside of that discounted pricing. And guess what? Look how this 50% matches right here with this liquidity. So now we have a reason for the market to come lower because we want to see the market rebalance this pricing. So coming back into the discounted pricing for us to get better entries. And we have small liquidity down here that the market can also take out when it comes down here. So this is a better area to buy than right here. Okay. That's why the original plan is to watch this market here for potential shorts into your discount. And then we continue. Okay. So that's GU. Let's talk about GJ real quick. So on GJ here, it's going to a higher time frame. We made all-time highs, I believe. Yes, we are. No, we are not. Well, I mean, this is damn near all-time highs. Last time we were over here in 07, so yeah, but anyways, the structure, accumulation, reaccumulation, we held the reaccumulation, and now we got this one big push. Now, guys, I'm gonna let you know that from down here to up here is one large push. So what do I mean? Now that we have created this high and we've stabilized, right? We have stabilized. This is a perfect example of us stabilizing a high. Look how instead of the market coming above this high and just immediately shorting off with one candle, we have sat above this high and we have created a distribution. That means orders were being processed here. That's exactly what we want to see. All right. So now we can ask ourselves, okay, if orders are being processed here, we got this one leg. Well, where did this move start from? This move started from down here. So we do the same thing. We draw our fibs from this low to this high, and we ask ourselves, okay, the market is in premium pricing. What can I do right now? You're not in discount, so buying right here unless we form a new demand zone. And what would that look like? So right now we see the market has manipulated underneath all these lows. If this candle rallies and we just break up here and we sit up here, right? So we get something like this, boom, and we sit, you can look for an entry inside of this area. Boom. Because now that's a new demand zone. Okay. But we haven't done that. So right now you're going to expect to look for potential shorts into discount. Once we get into discount, you're going to look for the market to start setting up longs by breaking highs and creating that same accumulation that we look for. Okay. This is what I would expect here on GJ. Just following simple price action, simple market structure. All right. Now, how you take your entries, that's up to you. Okay. But I'm going to give you guys the specific areas and the levels that I expect the market to react from. I know different people take entries for different reasons. All right. So whichever way is the best way for you to get your entry, just do that. Let's see. I'm not really a big fan of USDJPY. I mean, not USDJPY, but UCAD. But I will go into USDJPY a little bit because this market, now we're in a range. So this is not even a demand zone for me anymore, because if it was a demand zone, we would have already taken off. We're still bullish. We still have a bullish drive here from this low that is holding us to this high. It's just this price action here looks really ugly right now. I'm not going to lie to you guys. Since we're in a range, I would look for a manipulation of this low right here. And where's the top of our range? Right there. All right. So top of our range, bottom of our range, we see the market is just kind of going back and forth. All right. Now, what you need to pay attention to is when we're in a range like this, we need to see what is being manipulated and what is being held. So top side is being manipulated, but it's not being held. So we know that the market is not ready to go. Bottom side has not been manipulated yet. We're forming liquidity. So there's a lot of liquidity sitting underneath these lows. What I would expect here is if we get a manipulation, since we're already bullish, we can expect the market to continue higher, right? Let's draw our fibs. Boom. What I want to see now is I want to see a manipulation, right? I want to see, boop, just like that. And that'll set up a nice reaccumulation for us to continue this bullish price action if it wants to. So the only way that we're going to expect this market to continue going higher, though, is if we actually get this manipulation and we get a strong move. Okay? If we see the market come down here, stabilizes, pushes back up, continues lower, we're not going to be ready to buy this yet. I'm probably going to expect us to come a little bit lower to do this. So this needs to be fast. It needs to be quick and fast. Okay? You guys see how, let's go back to DXY. Right here. You guys see how when the market wasn't ready to go yet, you see how much time it took? Look at these manipulations. Look at these manipulations here. You see how ugly, how much like ranging we have. And then once we get our spring, you see how like violent that is? That's what you want to see. You want to see a violent manipulation and then the market actually rally that manipulation. That's what we want to look for. Okay. So last but not least, we're going to talk about gold. And gold is still maintaining its bullish pressure. Now, this was the last area that I told you guys to look for a buy from. And hopefully you guys did not get manipulated out of this. But if you were able to catch a buy from here, I hope you were able to get one. But you shouldn't have been trading this open anyways. So kudos to you guys that actually were able to take a long here, and maybe you got in somewhere inside of this price action. I know gold mainly is traded during Asia session, so I'm not an Asia session trader, and I never have been, honestly. So I'm not gonna give you guys too much. I'm just gonna really stick to the structure of this. And I like gold, don't get me wrong, but I have an off feeling about this. The main thing when I see structure like this, I just want you guys to be careful, because this looks like we're setting up a lot of just trend line liquidity underneath us that we could easily start manipulating to the downside again. All right. So just be careful with that. And that's why I'm telling you guys, like, just follow this for now, right? Just follow this. Oh, did we even make a new high here? Okay, so this is the high. And the reason why this is the high is because this high actually sat above here. This is just a wick. But you guys see that we've just manipulated this high, right? So what we could see is you could very well see a down push underneath these lows. Boom. Once you get that down push underneath these lows, this is where we don't want to break. If we break this, then just know that most likely we're going to take out the rest of these lows. So as long as we're above this, you're good for now. But we want to see the market do some type of manipulation and then the same rally that we've been getting to continue this intermediate bullish trend that we have going on. The reason why I'm even like supporting this trend is because of this aggressive rejection from our 50%, right? If this wasn't aggressive and we weren't running away from it, then I wouldn't even suggest you guys to trade this. But we've been running away from this, and we've just had like such a huge downfall that I do expect price to really consolidate its way up there, just based off of this. All right. But just be careful. Just because we're seeing the market move in this direction and we're still holding the structure doesn't mean we're just not building liquidity. So take advantage of the easy structure while you can. All right. So that is my bias, my market outlook for this week and what I'm looking for. Let me know if you guys have any suggestions. I appreciate those of you that do watch these, and I will see you guys in the next one. Peace out.